G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. I'm going to be in real trouble with this episode because I'm stealing Bernadette's thunder. And like every terrible husband, mate, I swan in and take all the glory. Bernie should be here because we're talking about all things self-managed super funds. But as a mother, with her motherly duty, she's with the kids today. And would love to have been here talking to yourself, Raymond. Raymond, welcome back on because I know we've had you in the past.
We have.
Yeah, so you're a serial offender now as you get coined. But mate, new name, same gig in what you're doing. So we're gonna go there a little bit as well. But for those that missed our previous episode, and we'll include a link to that as well, what do they need to know about Raymond Hempstead? What are they?
Me, I'm a Queanbeyan boy.
Yeah.
Born and raised in Queanbeyan, went to public school down there. Tried real estate many years ago, hated it.
Yeah. That's a rite of passage for a lot of people.
Oh, very much. Then I became an accountant. Yeah. Got out of that after a bad motorbike accident, then back into business after rehabilitation.
Yeah.
Then back into property probably about 7 years ago. And like that really quick journey, but yeah, certainly opened my eyes up.
Property just has this magnetic thing that just keeps pulling you back in once you've come into contact with property. I think you'll always have an affiliation or connection to it, right?
When you understand the power of doing it properly and doing it well. And we were actually supplying properties to accountants and financial planners back then 7 years ago. And then we came up with a solution for one contract property, now Supervest, and that just opened my eyes even further. And just the power of what we can do with property, just the strength.
Yeah. So, you were one contract property before, so on your previous brand, you're now rebranded to Supervest.
Yep.
Yeah.
So the same company. The company's one contract property, now it's trading as Supervest.
Yeah.
So just as we're growing and bigger opportunities and more products that we're putting out, one contract property didn't really cover everything that we're doing.
Yeah, great.
So Supervest.
Very excited.
Covers that, yeah.
Yeah, good one. I guess there's been a lot of changes. And when I talk about SMSFs, so self-managed super funds. Like I said, Bernadette, this is her bread and butter. This is all she's doing, for example, which is why it's a real shame she's not here. But, Bernie's done a few interviews about what's going on in lending, for example, and it just feels like people that were capped out in individual borrowing capacity now realize they can still stay in the market. They want to be part of the market, for example, as well. They're going, what? It's almost like their eyes have opened. They're like, what? I can still keep borrowing. I can still keep purchasing investment properties. You guys come along and kind of come out with some different products as well, which we'll talk about. But it really feels like it's the flavour of 2024, doesn't it?
Oh, it does. Especially as people get more educated, they want property. They still want lifestyle a bit as well. And like we were talking about family earlier, family's a big thing. Like you can make more money, but how about using the money that you've already got that you haven't been able to touch on before?
Mate, correct. Let me I'm going to read this out because I was at a conference recently and they started talking about SMSFs. So let me just I'll walk you through this. Australians are living longer with a life expectancy of 83. Australians are buying property later in life, starting a family later in life, and are working longer well into the retirement age. Age pensions have not kept up with the cost of living, and it's unlikely that the age pension alone will provide for a reasonable lifestyle in retirement, which we know. Hence, it's why more Australians should take a greater investment in their retirement savings and look for ways to maximise. Australians have a love affair with property and have the belief that it's a good and safe investment, hence the term safe as houses. This has been evident recently with house prices continuing to grow and many Australians looking to take control of their superannuation and decide how it's invested. At present, there are over 614,000 self-managed super funds and growing at a rate of 590 new SMSFs per week with a total assets under management of just short of $1 trillion. That was what I got read out by one of the MCs recently at a conference. That blew my mind when we have 614,000 self-managed super funds that are set up but are growing at nearly 600 per week.
And when you look at just the transfer in the March period, there was, I think it was just under $1.8 billion of cash moved from industry super funds into self-managed super funds. In that, I think it was 7,000 new self-managed super funds that were set up in that period.
Right.
That's a lot of people taking control of their money.
Yeah.
And money that wants to have a home. Absolutely. And literally a home.
Yeah, great. Which I hear that, then I think, with this much activity going on, surely there's a little window before things get a little bit more tighter, a little bit more stringent, for example. Is that your view of the world?
As in the borrowing or
as in like the
use?
management? Yeah. So I guess, people being able to handle their own super.
Yeah.
Do you feel like the government, where I look at intervention, for example, from a government perspective or policy, you see this many people taking control?
It's already a challenge to set up a self-managed super fund.
Yeah.
There's already roadblocks in place and you've got to jump over those. So you need some good advice and good guidance to get through that. But is it going to keep on going? Hey, the government, in my opinion, the government's going to keep on trying to tax it because you don't have nearly $4 trillion worth of money sitting there and the government's only taking 15%. So I see that changing. I still believe it's going to be the best vehicle to hold long-term wealth in, even when they continue to keep on playing around with it. But it's still not being used, in my opinion, correctly, because I think the stats are there's only about 11% of people that are buying property in their super funds that have got an LRBA. So there's only about 11% that are leveraging. People are then actually buying property with cash, 100% cash. And I think it starts to show that they're not talking to the right financial planners. They're just taking control of the money and buying a property and thinking they're doing a good thing.
Yeah. So why do you say that? Why should they be going down the opposite path then?
Is it right? I don't think it's right or wrong. It's because, like, I suppose what Supervest has brought to the market is to be able to build new property inside your super fund, right? So you can pick up capital growth on that side of it. You can choose what you want. But even if you look at someone spending $1 million on a property and they're putting $1 million cash in, you can't borrow against equity in a super fund. That's one of the downsides. Right. So if you want to get equity out of that, you've got to sell the property. Yeah. So if you're working with the right advisors, and if you're like we deal with a lot of people, $500,000-$600,000, and they're putting $350,000, $400,000 deposit against a $1.3, $1.4 million build, and they're leveraging the rest of the money. And so when they get to completion, then they go into an 80% LVR, pulling some cash back out into an offset account, and then nearly going again and having the property being paid off over the next 15, 20 years. You compare that strategy to someone that just dumps $1 million into one property, and I'd be surprised if that one property is actually cash flow positive. It might be neutral, but more than likely it's negative geared. So it's just a different strategy that people are looking at. And with 11% of people that are using debt, they're not understanding the full power of what they've got in their hands.
Yeah, okay. Well, thanks very much. So, I mean, you mentioned before in our chats briefly that you've got something called fractionalised investing, which we've heard of this kind of happening outside super, and people get in the market with smaller contributions. Yeah. How's this happening at a super level?
Supervest's actually building the properties. So we're choosing NDIS or co-living properties around Australia, aligning ourselves with STA providers and SIL providers that are managing the actual properties. And then we're selling off 35% of that asset in 5% shares. So people can now, and this is happening outside of super as well. So originally we developed this for people that had some residual funds in their super after buying property, or they just didn't have enough to get into a full property. But we're finding a bit under half of our deals, people outside of super are starting to buy into this as well. But so high cash flow properties, you're looking at up to 11% returns per annum on rental return, and that's paid monthly, just like normal rents. And then you're picking up capital growth. So if you've got a 10% shareholding, your name's actually on title. So you own 10% of that property. You're at the land titles office, your name's there. So you've got security of property and your own and getting the return of that property. So it's literally, I suppose, blowing the lid off property in the sense that people can now get into high cash flow properties without having to have $350,000, $450,000 as deposit.
Yeah, okay.
So, yeah.
Is there anything people need to be aware of? Because this sounds like a great idea. The amount of young Australians that I meet, that, particularly younger Australians that are trying to rent vest or get their foot into the market, and sub 30, they don't really have.
No,
they're not the peak superannuation accumulation years, right?
No,
sub 30. But they might have $50,000, $60,000. You mentioned people are getting in for that amount.
Yeah.
What they need to be aware of going down this path? Is there? It's not a loaded question. It's just more to say what you don't know.
Yeah, no.
You don't know.
Someone asked me the exit. How do they get out?
Yeah.
And I said, is that a risk at the moment? It might be, because people are buying into these high cash flow properties at 10 and 15%. They're the averages we're seeing at the moment, because we're in the build process of each of these properties. So we haven't finished a property and had the exit. Okay. So can it be sold? Yes. Like, I've got first right of refusal to actually buy it anyway.
Okay.
But can it be sold? It's a high cash flow property now, fractional, $70,000, $80,000 by the time it gets commercially valued. Is there a market for someone to come on and drop in $70,000 with the knowledge they're getting a monthly cash return on it? I believe there's a strong market for that.
Yeah.
But that's one area that hasn't been tested.
Yeah. I mean, you're breaking ground, literally.
Yeah.
And figuratively as well when you're going here. You mentioned around NDIS, and again, when Bernie's talking about SMSFs, this is really like to be able to buy SMSF properties through your NDIS properties through your self-managed super fund. This is new territory as well, right?
It is. Now, I'll put a caveat. There's a lot of people marketing NDIS properties. In my opinion, they're being done incorrectly, because they're not running a participant-led model.
So take me through what's the difference.
Participant-led model is you're looking at it from the eyes of the individual disabled participant. All right, you haven't just got a builder that's decided they're going to build an NDIS house. So you're actually working with the SDA providers that manage the individual participants. You're working with the SIL providers that are providing the daily care.
Yeah.
And so they then give you guidance of what you can build and where you can build it.
Yeah.
Because if you build the wrong house in the wrong location, it'll be expensive, because there's lots of other stuff that have to go into there, and you won't get tenants. And they'll sit there vacant. And there's lots of houses around Australia like that. So when it's done correctly, it is an amazing product.
Yeah.
You get some great returns, but it's also a social product, because you're now changing the lives of people that can't help themselves, which is an amazing position to be in while you're making money at the same time.
Yeah, okay. Yeah, well said. Yeah, we're seeing a lot more in that, both resi but also commercial through self-managed super funds. That becomes a really big play for it as well. Yeah, you mentioned tenants. So that's tenants in common as well, that fractionalised investing, isn't it?
Yes.
Yeah, because that's, again, another big one that Bernie's been doing a lot of, which is the tenants in common. The other one is when two SMSFs are purchasing together. I'm not sure if you've seen this, but we can take, let's say, for example, and the example that we give is, so Aaron and Bernadette, we have our own self-managed super fund.
Yep.
Bernie's brother, so my brother-in-law Damien, that works with us as well. Damien and his partner Lily, they could have their own self-managed super fund. We can together put those together and go and buy
a property together.
Yeah.
Under tenants in common.
Yeah.
How do you find getting funding for that on your side?
I mean, there's banks that will do it.
Yeah.
Yeah. So a matter of, it's more that you're doing the education piece because people don't know about it.
Yes.
And going, they haven't heard of it. It's almost like saying, hey, there's a lender that will do 90% on a self-managed super fund. They haven't heard about that. So it's like that's almost the education or the awareness piece.
It is.
Before the actual product knowledge that comes along with it as well.
Yeah. And do you see with your clients, they're coming through like Bernie and financial planning, or are they coming to you just from education only?
I think, it's the latter. Yeah. I don't think it's heavily promoted through the planning side at the moment. And fair enough, they've probably got lower balances, but what that doesn't take into account is their hunger. They want to keep growing. So they won't let a lower balance deter them. They're going to try and find a way. So whether that's 90%, whether that's fractionalised, whether that's joining forces with another SMSF to go and buy, they're looking for reasons to make opportunities happen, as opposed to the planner might be going, because the planner's neck might be on the chopping block here.
Absolutely.
in terms of giving this advice, right? So generally what I've found is people have then come to us. Bernie's then got the education piece, which is these are all the options that are available to you. What would you like to explore? And that's then opening that conversation up.
Yes.
As opposed to maybe going on a plan and they've kind of just knocked it on its head and it's not proceeding, right? And we generally find that, and we've spoken about this previously, about the quality of the team that you're putting around you.
Very much.
And who's the enabler versus who's the detractor.
And it's having people like yourself, and I was actually listening to a recording on the way in, and the question was asked, there's people that can ask, can I do something? And that's a negative point of view. You need people around you that are saying, how can I? Totally. It's a totally different viewpoint for the same question.
Yeah.
And so, having the right people is huge.
Yeah, so whether that comes from people's either lack of knowledge, whether that comes from people's own personal biases, or whether it comes from their ability that they don't know how to do it, or they can get projected onto a client if they're at the center of it going, I just want to buy a property, and say, okay, great. How can we do this? These are all the options available. Pick your poison.
Yeah.
And let's make it happen. It's not to be making rash decisions. It's making educated and, we often say this podcast is all about making confident property decisions. Confidence being the imperative part, isn't it?
Having the right brokers, financial planners, accountants around you that have got a how-to attitude rather than, no, can't be done.
That's a really hard one, because how does someone find that person? Because
asking questions.
What questions would you be asking? Because if you're SMSF, like pro SMSF, and you really want to push the boundaries here, what questions? Because you would have talked to accountants and financial planners in your past life. How do you then find out who's going to be on your side, and how do you find out? Because service-based businesses are very hard to compete and compare. Right?
The first part is asking them a very direct question: what can you legally advise me on, and what can you legally not advise me on?
Okay.
And that will, I suppose, separate the sheep from the people that actually want to move. And then it's getting back into asking them, and if they're open about it, what are their long-term goals? Are they involved? Are they interested in property? Like for myself, my bias is new property. If I'm talking to people that all they've got, like I've got one of my staff, great guy, but he's all in shares, but he's great with numbers.
Yeah.
Right, but that's his focus. He loves his numbers, but he's a share-minded guy. Where you talk to him about property, he doesn't know much about it. It's not on his radar. But if someone is already into property themselves, then I'd be questioning, are they the right person to get advice from or start having on your team? Okay. If you're into property yourself, that's where you want to go. Yeah. And then the next one is, how big's their vision? Right? Because like you'd have mentors in your life. I know in me looking for mentors in my life and my business, when I went to get my last mentors, I knew where my vision was for business and personal and growth. And I needed to make sure the mentor that I was chasing had a vision and, I suppose, success that was far exceeding that. Because
I know who are you happy to share a little bit more about this?
Yeah.
Because I'm pretty sure I know who you're talking about, which is GC, right?
Yeah, absolutely. Grant Cardone.
Yeah. Polarizing guy.
Oh.
Polarizing dude.
Yeah.
I don't think you can take much away from the bloke that he's pro property and he's unapologetic about his success, which that's probably where it ruffles feathers. But like you're saying, he's someone that can think bigger, and I actually got to see. I flew to America about 2 months ago and physically met him face to face for my mentoring session, one-on-one for the first time. Yeah, right. Okay. Can you tell us a little bit more about how that goes down and what type of conversation you're having? I went in there and I knew I was going to get my ass kicked. Excuse me. Okay. Because I hadn't hit my goals. Okay. I walked out of there with a mind expand. I thought I already had big goals. I walked out of there and just had my head exploded. And I was only going to be there for the week. From that, I flew over to the East Coast and spent another week and a half with one of his business partners, Brandon Dawson, about scaling businesses. Right. And that was just like another mind expansion. Again, like Brandon's worth, I don't know, $600 million. Grant's worth over $4 billion.
and getting to spend time with these guys and pick their brains and being in a group of 90 people and just question answers and just free for all. Just
So
an
how do you
eye-opener.
get challenged? What limitations did you have that you weren't playing a big enough game?
I walked into Grant's office and we're talking about Supervest, and I raised the safe property solution. And I had a goal of doing 200 safe properties in the next 12 months. By the time I walked out of his office, the goal of safe property is now 1,745 in the next 12 months.
So from 200
to 1,745.
Yeah, okay.
And that for the next 10 years.
Okay.
Like that's just
That's a huge shift.
huge. So even coming back and like we're scaling our business and growing, but even just that thinking of the possibility of that is normal for him. So if you haven't got people around you that are stretching your thinking, like Grant talks about 10xing all the time.
Absolutely.
But if you've got people, and you would have heard it, if you take and it's a saying, if you look at the 5 most important people around you and you average their income, that'll be your income within plus or minus a little bit. So if you haven't got people outside of you that are stretching you in your thinking and your abilities, maybe you might look at other things.
Mate, absolutely. It's a really hard to hear that. It's a hard truth to hear. And the same could be said, I think the same is said across other things. Like if you're married and you're hanging around friends that are now recently divorced, your likelihood of getting divorced goes up. If you're hanging around friends who are, it's hard to say, overweight, your chance of becoming overweight increase.
Absolutely.
Hanging around friends that aren't pro-property, for example, they're not enablers, they're detractors as well.
Absolutely.
So, yeah, it's a really hard one. And I think I've even seen, I think we've even spoken about in one of the previous episodes, like what got you here to, especially to a friend or a network part, won't get you to this next level of growth. So how do you surround yourself? And it can get a little bit lonely because the herd is saying, now you moved away from us, you're too good for us. But you're trying to find your tribe as well, and we're social beings. This is a new journey that a lot of people need to go on. It's like, now who do I trust? Your friends start to change, your conversations start to change as well. And I see this a lot with property investors that start to get a bigger portfolio. They can't even share that with their friends for the fear of being ostracized.
Yeah, it's a tall poppy syndrome here.
Yeah, and it's such. And I want to challenge. I was at a property summit recently, and they're like, "This is the only place that we can come to where we can talk about my wildest property dreams." Because if I have this conversation with friends, they're literally going to go,
"Yeah, they crap all over
off
you
with your head, mate." Because they're like, "Who do you think you are?" And I never thought that would be a thing, but
it is. But it's like you'd think people would be happy for your success, but when I look at it, it's when you're chasing your dreams and you're doing the hard yards and doing the work and your fails and ups and downs, it's like it's not against you. It's a reflection of themselves against themselves because they're not willing to do what it takes to be able to move forward. And they're just trying to make you feel bad because of the hurt and feelings they've got inside themselves because they're not willing to chase their goal. If they're happy with their life, be happy with your life. But if you've got some bigger goals and dreams and you're wanting to chase them, there's so many people that make it. This is the way I look at it. They think that it makes them look bad because they're not doing it. But they don't have to do it. They just have to support you. Yeah. But it's a different mentality across Australia that doesn't exist.
Do you see that more in America? Because when you were over there, are they a little bit more...
I suppose...
What's the word? Less tall poppy then, or what's the story?
The 3 weeks that I was there, I spent a lot of time around business people that were involved in the Cardone
philosophy. Yeah. So they're big thinkers, they're movers and shakers. Yeah.
Like I was in one session, a 10x360 event, and in that event, that cost me a whole chunk of money to get into. Like that was $50,000 to get into the room. And there was probably 90 other people in the room. And there was one couple that was sitting on my right. They had just invested $250,000 on what they call platforming 12 months ago. And that was their entire life savings. But in that 12 months, the difference that it made, it quadrupled the size of their business.
Right.
So I'm sitting in a room that guys are willing to put their balls on the line, guys and ladies, putting everything on the line to chase their dream, to be around people that can help them and have got the same direction and motivation. So I suppose I was insulated in that 3 weeks because I spent so much time in that environment. Then coming back to Australia, it's like, wow. Like I actually flew Michael, my director of sales, when I decided to go to the East Coast. I called Michael and said, mate, what are you doing next week on your diary? He told me, I said, well, cancel everything. I've just booked you a ticket. You're coming to America and you're going to spend a week and a half in some training sessions with me. I was getting around the right people.
Burn the boats and mate, there's no way back. But I think I think we need this. Like you need big thinkers in this space to really challenge people and go, mate, imagine you, and it's what I call the ripple effect. So imagine you impacted the lives of 200 people. That's awesome. It's 200 people. But now you're going to 10x that and you can impact the lives of nearly 2,000 families financially buying property when they thought they maybe couldn't or didn't know the way. And that knock-on effect and, over time, this exponential effect and the compounding it's going to have over 10 years.
But doing it simply, like showing people that it's possible. So when they're sitting around a barbie and they're talking to their friends, we're not showing them you've got to go out and spend $100 million. No, just redirect how you're using your super. You can now invest it into property. Like we've got a couple of clients that are fifth generation renters and have now bought their first investment property using their superannuation because they had decent balances. They just didn't know it.
Yeah.
Now, how many families can you touch like that the mum and dad are now investors and they're still renting their home.
But at least they're in the market.
But they're in the market.
Yeah.
Right? Just the difference that it's made for their 15 and 16-year-old kids to see their mum and dad.
Oh, spot on.
Just that one change.
Mate, you're spot on. When I talk about intergenerational wealth and parents that want to help their kids, I'm like, you do it.
Yeah.
You do it for yourself. They will learn so much more when you have done it. Otherwise, you're coming from a place of you do it, kids, but we haven't done it for ourselves. Like, I don't believe you, right? And
you've got young kids. It's like, don't do as I say, do as I do.
Yeah. That's exactly it. Whereas skin in the game and the parents are doing it, the kids will then have that self-belief because now it's part of our DNA.
Yeah.
We're now property investors as a family. I say this to so many parents. I'm like, don't just give it to your kids to go and buy property. Do it for yourself. Set yourself up. Make the pie gets bigger as opposed to sharing a piece of the pie. The actual size of the pie gets bigger.
Absolutely.
Now we're thinking abundantly. Now we're thinking that we can help our kids with more, but you also helped yourself in the meantime.
But is that just that little bit, just that little step? It's that little bit. We're not talking about having big goals and having 15 It's like just that next one. But working with quality people around you to make sure that one is done correctly.
Yeah.
And you're using it and you're leveraging that the best way you can. And so you get to the one. It's like, I think there's a book called Peak to Peak. You get to the first top of the little mountain, you can see the next mountain. You can't see over it. By the time you get to the next little mountain, you see a bit further. So peak to peak, you move forward. And so we're taking people that haven't got the belief that they can do anything else and they're going to retire on the government pension. And so we can now educate them. There is hope. Like you're seeing look at all the rich people and wealthy people around Australia that got property.
Oh,
now you can do that with your superannuation. And whether it's through safe property, a fractional product, or whether you got enough to get into whole property, you can now set a plan to change where you're going to be living in retirement.
Yeah. I think maybe one of the questions that people would ponder is, you're talking about building these properties, and the first thing that comes around construction is builder risk or the costs. How do you mitigate that at the moment?
I'll give you one example. We've been blessed over the last 4 years in building property, and there's builders go broke.
Yeah.
And that's one of the risks and why the ATO have got such stringent requirements about not being able to build property in your super with debt.
Spot on.
Because of this risk. And I suppose where SuperVest come in, we're that buffer in between, because we're the ones that are actually building it. We've already pre-sold it to your super fund. And I've got one example. We've only had one like this in 4 years. Touch wood.
Touch wood.
My ex-marketing manager, she bought an NDIS property inside her super and outside her super. And then she's moved on and she's doing TV presenting and going off really well with herself now. The builder that was building her NDIS property inside her super fund went broke about 8 months ago.
Right.
Now, they've got a contract with us for about $1.1 million from SuperVest. The builder's gone broke. We were at lockup stage. So we're into, I don't know, nearly $1 million of our funding. And we're working with the QBBC up in Queensland. In the next 2 months, we'll have another builder just to come along and finish it off.
Yeah.
But from her super fund side, it hasn't cost her anything extra.
Okay.
It cost us a bit of extra money, but that's part of doing business. But she's got a contract. Now, she had a meeting with her on Friday, and they were saying, like, should we pull out? And she could have, because they're past the sunset clause and we could give them back their deposit. But the price of the property and the land over the last 2 years has gone up a huge amount.
Yeah.
So even though they haven't had the cash flow, they've picked up the capital growth on, I think they put in about $360,000 deposit. The increase in land and value of the house has gone up nearly that amount already.
Yeah, okay.
So is there a risk? There's a risk, but because SuperVest is in the middle there as the buffer, we take the risk if the builder goes down. We've got to carry that cost. But when you're doing lots of them every year, we mitigate that risk because we're doing so many of them. Whereas if you're a single super fund and that's you, if you could do it, which you can't, then you're carrying a big risk.
Okay.
Does that make sense?
Yeah.
Thanks, Susie.
How do people find out more? Like, obviously, this is new. Like fractionalised investing, for example, through SMSF. Obviously, you've got to get your self-managed super fund set up, for example. There's a whole raft of processes in there as well. So what is someone listening at the very start of their journey? What do they need to do in terms of moving forward?
Get some good advice to start off with.
Okay. From
a financial planner.
Okay.
All right. If you're like, I can't give financial advice. Even my accounting background, we sell properties.
Yeah.
Right. We build properties. We give you the ability to be able to build whatever you want. But first of all, before you do that, understand that it's now possible to build anything you like inside your super fund. As long as you've got that knowledge and you've got the ability to now start to plan where you're going to end up. Now it gives you the choice to start to dream a little bit. Because where I see a lot of people fall down is they go with the government rhetoric, you need $690 in your super by the time you retire. That'll give you about $70,000 in income, which includes a good chunk of the government pension. How can people plan? And they can't plan for that.
9% not.
But when you show them there's now a structure that you can start building property and making money and getting it paid off, now they've got a bit of hope. So they can start planning and dreaming. Then they start talking to the right sort of financial planners and advisors. And if it's the right thing, then set up the self-managed super fund and start going that path.
Yeah.
But you need to have the goal first. But to get the goal, you need to have the understanding that it's now possible.
Yeah, okay. I appreciate it.
Yeah.
Thanks. Yeah, if you're thinking self-managed super fund, the beauty is there's conversations you'll be having now and get things done. I say have things running in parallel. So you speak to a broker or someone like yourself and go, right, what's actually out there? Yeah. Speak to your financial planner in the meantime, get this set up, and things can happen rather than having start here, stop, pick it up again. Don't wait for something to happen and go to the next. Have it running in parallel, and that momentum's just going to keep moving you forward.
And people can do that now. Like prior to SuperVest, for you to own property in your super fund 4 years ago, you could only buy established properties, or you had to find a builder that was going to give you a single part contract, which was very small, few and far between. Now you can have a look at anything and we can turn it into a single part contract. So the supply of product we've removed that problem that you can only have a limited supply. We can turn any 2-part contract in Australia into a single part contract. So you can see what's available now. And as you said, you can look, get an idea of it, start the process and set up your self-managed super fund, roll the funds over. And by the time it's there, the houses that you looked at here might not be probably won't be available, but there'll be more stuff. So it's not a limited supply. So you've got confidence that you can now start the process and not have to rush it. And you're not being forced, you have to buy this because it's the only thing that's available.
Yeah, I agree.
So you've got time to do it properly and set it up.
Thanks very much. I appreciate it, mate. Well done on your thinking bigger. It's inspiring. This is what happens. Like you think bigger, then person next to you goes, I've been challenged a little bit on that as well, and people listening then get challenged on that, and the ripple effect gets bigger and bigger. So
100%, just change. I suppose we've got a goal of changing 100,000 families' lives in the next 10 years by helping them leverage their superannuation and build property inside their super.
So it's 10,000 people a year.
Yeah.
Over 52 weeks, 200 people a week. I got my math right?
Yeah, it's about that. It's a big goal. We're not there yet.
Well, no. I mean, you'll see that probably in the last 3 years. I reckon you'll see that huge growth. Right now it's
just ticking through.
One step at a time, and eventually it's going to culminate. But you talk about, I feel like you'll see the most impact compounded within those last 3 to 4 years.
100%.
By laying a good foundation.
And that flows on to businesses like yours working together and just helping people understand what's possible.
Yeah.
Changing people's lives so that they can, I suppose, so they're not like my dad and they live and die on the government pension, but stressed. Yeah. Like my dad died and he knew he was dying. His biggest stress was how he was going to look after my mum after he passed because he knew he didn't have enough money. Like in Australia in 2024, how the hell do we get to that position with our parents and grandparents when we don't, we're here. But in the next 24 years or 30 years, we don't have to have that happen.
I agree.
Because people can make the choices today to change that.
You're spot on. Yeah, spot on. I speak to so many people and I'm like, what are you, not only buying the property, but I'm like, show me your super balance. We've got to start thinking about that now. You don't want to wait.
Yeah.
You don't want to sit back on your heels and wait for, you get closer to retirement to start thinking about that. We've got to have that conversation super, super early so you can give that time to compound, that you can have the magic of growth in the background as well. It's not about making quick, rash decisions. You got to think through this, but also
it's your money. Like,
correct.
Like if you're in your 20s, how much money have you got on your super? Where is your super? What's it doing?
I had, I think, 8 super funds before I got married. But that's probably why Bernie loves super, because she made me consolidate into one, and I was disorganized, mate. And I think that's probably
Have you seen a big change though?
100%. 100%. I mean, I think we've spoken openly. We set up our SMSF and take control of that. And I think if we're telling people to do it, we've got to do it ourselves as well.
Absolutely.
Yeah.
Absolutely. Yeah. No, it's amazing.
Beautiful, mate.
Appreciate being here.
I'm excited. Thank you. I appreciate that. If you want to find out more about SuperVest, we'll include details to your business, so you can check that out. If you're curious about fractionalized investing, we'll include some more info too. If you're thinking about buying through a self-managed super fund, then we highly, highly recommend getting in touch with Bernadette as well. Like I said, this is all she does. So when you get pretty good at something, you build an inch wide and a mile deep on which banks are doing what policies there are. There's a huge track record. We're helping clients get in there as well. So not angling for business, more just saying if you are thinking about it, scratch the itch and find out more as well. Yeah?
Yeah, 100%.
Cool. Thanks very much. If you love that episode or you think about, if you know someone that's mentioned about buying through a self-managed super fund, share this episode with them. Like we said, we don't worry about the likes or the reviews. All we care about is you telling someone else about this. And so that way the feedback loop gets bigger and better for us and we get more great guests on. So thanks very much. We'll talk to you soon.